Welcome to Solidarity Spotlight, a place where we share with you bleeding edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. The cryptocurrency landscape today is defined by significant volatility and strategic shifts, beginning with Bitcoin's notable retreat from its historic peak. After reaching an unprecedented $123,000 earlier this week, Bitcoin has experienced a 5% correction, now hovering around $117,000. This pullback is largely attributed to substantial profit-taking by long-term holders, often referred to as whales, who moved dormant coins to exchanges like Binance and Bybit. One particularly striking transaction involved an anonymous whale transferring 40,000 BTC to Galaxy Digital, which subsequently deposited portions into major exchanges. These movements typically signal impending sales and can intensify short-term downward pressure. Despite this, the market demonstrates resilience due to robust institutional support and structural demand fueled by spot ETF inflows, which recently saw back-to-back daily creations exceeding $1 billion. The broader market impact includes increased volatility across major altcoins, with Ethereum, XRP, and Dogecoin all facing declines as investors rebalance portfolios amid regulatory uncertainty. Concurrently, the legislative environment in the United States is generating optimism through Crypto Week, where Republican leaders are advancing 3 landmark bills: the Clarity Act for crypto asset custody, the Anti-CBDC Surveillance State Act limiting central bank digital currency oversight, and the Genius Act targeting stablecoin regulation. This regulatory momentum aligns with President Trump's push for swift crypto legislation and reflects a broader institutional pivot toward blockchain integration. The potential passage of these bills could legitimize digital assets further, attracting traditional finance participation and stabilizing market sentiment. Already, the announcement has contributed to Bitcoin's recent all-time high and buoyed related equities like Coinbase, which surpassed a $100 billion market capitalization. Institutional treasury strategies are also evolving, with Bit Digital announcing plans to raise $67.3 million specifically to expand its Ethereum holdings. This follows its earlier accumulation of 116 BTC, underscoring a diversified approach to crypto treasuries. Similarly, the blockchain group reported a staggering 1,348% year-to-date yield on its Bitcoin reserves after strategic acquisitions. Such corporate activity highlights a maturation in crypto asset management, where companies leverage capital operations like convertible bonds to amplify reserves. These moves could encourage broader corporate adoption, potentially tightening market supply as institutional holdings grow less liquid. Tokenization of real-world assets, RWAs, continues gaining traction, with Solana emerging as a competitive player. Though Ethereum dominates this sector, Solana's RWA market cap surged 140% year-to-date to $418 million, driven by protocols like Ondo and ONE, offering tokenized treasury funds. Solana's low transaction costs and high throughput make it appealing for institutional tokenization, narrowing the gap with rivals like Aptos. As RWAs cross the $25 billion total market cap threshold, this trend may accelerate capital inflows from traditional finance, particularly for yield-bearing instruments like U.S. Treasury tokens. Today also features critical token events. Alchemist's staking update enables ALCH holders to earn premium benefits, potentially boosting demand. Link debuted its real-time settlement network on Avalanche, integrating Arca's tokenized treasuries for institutional efficiency. Meanwhile, TAC launched its mainnet, bridging Ethereum DeFi to Telegram's billion-plus users via protocols like Curve and Morpho. Alephian's Danube upgrade promises 8-second block times and 20,000-plus TPS, enhancing scalability. Each launch could stimulate ecosystem-specific activity. For example, CAC's Telegram integration may onboard new users to DeFi, while Alephium's improvements might attract developers needing high-throughput infrastructure. Market technicals reveal underlying tensions. Bitcoin's open interest in futures contracts nears the October 2022 record of 744,000 BTC, indicating leveraged positions that could amplify volatility. XRP futures open interest also hit all-time highs ahead of the July 18th ProShares ETF launch, suggesting institutional positioning for volatility. Analysts note a CME futures gap between 114,380 and 115,630, which often fills during corrections. If Bitcoin retreats further, it might test support near 108,000 to 115,000, though its longer-term ascending channel remains intact. Dogecoin, down 8%, faces resistance at 21 cents amid delayed ETF expectations, reflecting broader altcoin vulnerability. Retail investors play a pivotal role in current dynamics. Data shows smaller wallets holding less than 100 BTC absorbed 19,300 BTC monthly, outpacing post-halving issuance of 13,400 BTC. This grassroots accumulation created structural support for Bitcoin's rally by draining exchange inventories, setting the stage for institutional ETF inflows. Such synergy between retail absorption and top-down capital deployment could establish a structural bid that sustains higher price ranges, transforming Bitcoin into a high-beta safe haven during macroeconomic turbulence. Cloud mining innovations are lowering entry barriers. Mint Miner unveiled a computing power as a service model using renewable energy, allowing users to lease hash rate without hardware investments. Similarly, CJB Crypto combined XRP cloud mining with strategic asset allocation, promoting dual income streams less dependent on price swings. These platforms could democratize mining participation, especially as Bitcoin's rise incentivizes retail interest. However, they also concentrate risk if market downturns affect yield stability. Filecoin's 5.6% decline today exemplifies sector-specific headwinds. Despite partnerships like Avalanche integration for smart contract optimization, FIL faced resistance at $2.66, sliding to $2.51. Elevated selling volume during the downturn suggests traders are scrutinizing utility tokens more critically than meme coins or BTC proxies. Presales are attracting speculative capital, with projects like Snorter Token, $SNORT, gaining traction for Telegram-based trading tools. Fueled by Solana's ecosystem growth, which saw $78 million in ETP inflows and 16 million active addresses, such presales could leverage bullish momentum. However, their viability hinges on sustained market optimism and post-launch adoption. That concludes today's blockchain spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.